Hello, and welcome to my Accounting for Business Decisions A Screencast assignment. The topic I have chosen for this assignment is petty cash funds, explaining the concept by definition and through a worked example. Firstly, identifying by definition, a petty cash fund is an amount of cash kept on hand for minor expenditures. Furthermore, most companies require that payments be made electronically or via a signed check. Due to the minor amount of cash needed, writing a check can be burdensome or in some cases not accepted. Therefore, the establishment of a petty cash fund is introduced. Now, whilst the capacity of a petty cash fund will differ from company to company, its operation involves three activities. 1. Establishing the fund. 2. Making payments from the fund. And 3. Replenishing the fund. Step 1. Establishing the fund. This is simply done by writing a check, cashing the check, and then placing it under the care of a designated custodian. Thus, in this example, Chelsea and Columbia Co. cash a $200 check establishing a petty cash fund on October 1. Thus, the journal entry increases petty cash and decreases the cash account. Continuing this step, in order to enhance our understanding of the worked example, on October 31 the fund was replenished. There was $100 remaining in the drawer and receipts of $58 in freight costs and $44.50 in postage. Subsequently, a journal entry is made decreasing freight and postage expense account. After the fund is established, Step 2 requires that the cash be used to pay expenditures in one of the two ways shown on screen. Step 3. Replenishing the fund. As the cash fund decreases, the fund must be replenished. In order to do so, the company cashes a check for the amount needed to bring the total cash in fund back to its original balance, hence crediting the cash account by the amount of both expense accounts. However, when a petty cash fund is replenished, the amount needed should equal the amount of receipts. However, this may not always be the case. As seen in Chelsea and Columbia Co.'s petty cash replenishment report, total receipts exceeds the cash requested to replenish the fund. Therefore, a cash over and cash short temporary account can be made. As a result, we must now use the cash over and cash short account to bring it back into balance. We do this by, first, identifying the amount needed by solving for the difference in total receipts and the cash requested to replenish the fund. In our example, as total receipts exceeds this, we must decrease it by the difference, ultimately crediting the cash over and cash short account to balance Chelsea & Co.'s petty cash fund. Thank you for taking the time to watch my video, and I hope to have made a clearer understanding of petty cash.